Hello, future home buyers, and those of you who are looking to refinance. I'm going to talk about how to get the lowest monthly payment. There are a few different factors that will drive your payment that the lender will come up with for you, and some of it you control, some of it you do not. So the first thing is obviously the loan amount. The larger the loan amount, the larger your mortgage payment will be. So if you shop for a cheaper home, or if you put a larger down payment down, then your payment would be lower. Also, as I mentioned, the down payment, if you put at least 20% down on a conventional loan, for example, then you won't have PMI, which means your down payment would be lower. The other thing that you can do is look for homes in areas where the taxes are cheaper. A lot of people are shopping for homes in towns where the taxes are high, or if you happen to find a home that has lower taxes, where maybe some of the other homes in the surrounding area are higher, the taxes absolutely will play a major role in your monthly mortgage payment. So potentially look for homes in areas that have lower taxes. You can also shop for cheaper homeowners insurance. Consider a policy where your deductible is higher but your annual premium is lower. And what that means is, instead of, say, having a $500 deductible, you have a $1,000 deductible. So if you have a catastrophe, you're spending $1,000 instead of $500, but maybe as a result your premium is $250 a month less. I'm just giving examples, like $250 a year, not per month. So those are a couple of things that you can do. Another thing to get a lower payment is you can ask your loan officer for a quote on an adjustable rate, or even an interest only or a 40-year program. There's a possibility that your monthly payment can be lower by looking at those options as well. Now, your interest rate is going to also drive your payment. So the lower the interest rate, the lower the payment will be. So how can you control that? The first thing is that interest rates are partially driven by your credit scores. So if you can increase your credit scores, then the rate that the lender will offer you could be lower. If you're buying a home, maybe you can talk to the seller about contributing towards closing costs to actually buy your rate down. Pay a couple of points to get a lower interest rate, which will then lower your payment. You can have the seller do that. If you're refinancing, you could roll those points into the loan amount and then get a lower payment. So even though you're paying the points in increasing your loan balance, the offset of having the lower interest rate could actually result in a much lower monthly payment. So these are just a few examples. If you want to talk about it and do some real live examples of how to do that, just follow the link down below in the first pinned comment. We'll be able to help you there, or in the description, I'll put the link there. I appreciate you watching. If you have any questions, leave them in the comments. If you would, please hit the like button. It helps Google and YouTube to share the video more with others. Thanks for watching, everyone. See you next time.